Hey everybody, hope everyone's doing well and had a good day. This is the overview of the Emini 5-minute chart for Tuesday, November 19th, 2024. Take a look at the daily chart first. Yesterday was an inside day. I mentioned that if we do break out of yesterday's range, the distance that we break out will probably be limited. Inside bars are trading ranges. They're completely within the range of the prior bar. It's range compression. We have a higher low, a lower high, probably sellers above the bar and buyers below the bar. And that's what I figured for the expectations going into the day. For the 5-minute chart, really interesting on the open. Today has to be a little bit quick, but I have a good amount to talk about here, and I'll explain why in just a moment. But look at the open for today. We have a fairly big gap down, but look to the left. We have bars to the left, which means we're not breaking out far below bars to the left. We may just have a vacuum test down to the bottom of a trading range. And I want this to be more clear, and I think it will be if we look at a Globex chart, maybe the 15-minute. Here's the 15-minute going into the day. And even that, not great. Let's see. 30-minute. 60. What I'm trying to show is sort of the big picture. What we have here, we have this bear trend, and then we have a trend line break. And you can see the bulls, we have a channel, high, higher high, higher high. And the bulls broke the trend line, and now the expectation is we get a retest of the bear trend's extreme, and then the bulls will go for some sort of major trend reversal. So bear trend, trend line break. Here's the retest. Big sell climax is down. It's two legs. It's a nested two legs. One, pull back, two, and one, pull back, two. So reasons to expect support here. And that's where we're opening going into the day. That's sort of the context that I'm looking at. So with that in mind, the blue line here is yesterday's low. And we broke below it on the gap down, but look at the follow through. 2 bull bars, 3 bull bars. The bears not getting follow through. We still have a big enough gap down. The odds are we'll get some sort of second leg down. Bars 1, 2, and 3, there's a lot of overlap. Bar 2 couldn't even close above bar 1's high. You can see all the overlap with bars 1 and 2. Even 2 and 3, lots of overlap. This is a channel on a smaller time frame. We rallied on 1, pulled back on 2, rallied on 2, pulled back, rallied on 3. So this is a bull channel on a smaller time frame after a bear breakout. So maybe a bear flag, and we're expecting a second leg down after the gap down, and the odds are bar 1 will not remain the low of the day. Sure enough, we get a quick second leg down, but look at the bear breakout. Bar 4 overlapping a bunch of bars. Bar 5, obviously a problem. Weak bar for the bears, could not even close below the prior bar, never mind below bar 1. So we tried to break out below yesterday's low, we pulled back. We tried again on 4 and 5, we pulled back again. We tried again below bar 6, we triggered a sell below 6, it pulled back. Tried again below 9, that's 3 attempts down at least. You consider the gap down, that might be 4 attempts by the bears. And typically when the market tries to do something twice, and it fails, it tries to do the opposite. Now, I thought this particular spot was really sort of interesting. And for this, there's a couple of things. I showed the higher time frame, major trend reversal context, but now let's take a look at the 5-minute Globex chart, because that gives a little more context. And here's what we have. I want to go to bar 11. Consecutive sell climaxes, lots of sideways here, parabolic bear breakout here. We're getting acceleration to the downside, bigger bear bars, and then the biggest bear bar occurring late, again after several sell climaxes. And then look at this rally. From here, this would be 9:05 all the way up to bar 3 today on the regular trading hours. This bull breakout damaged this bear breakout. It pulled back more than 50%, probably pulled back something like, 75%. This red line in the middle is 50%, probably about halfway between here and here. So say we pulled back 75%. The odds of getting a new low are greatly reduced. I don't know the exact probability. I know when there's a 50% pullback, the odds are still pretty good that we'll come back down to the low. But once you get 75, 60, 75%, the odds are greater that we are in a trading range. And consider this is a sell climax, and the bears want a measured move down of the breakout all the way down here. But then we had this rally, and this rally should get a second leg. So the reality is we have traders trapped down here on this bull breakout. We tried to sell off, but just a minor reversal, testing the start of the channel, spike, channel, pullback, testing the bottom of the channel. Now we're going sideways. The odds are we're not going for a measured move down of this bear breakout after seeing this, and the target is the start of the sell climax, the top of the sell climax here, and that would be a target for the bulls. Leg 1, pullback, leg 2. So even though it's a tight trading range here, I actually thought it made sense to look to buy somewhere around here. And I'll explain more about that at the end of the video, because I have more about that to share. And again, I have to keep it kind of quick, so I don't want to go bar by bar, but you can see reasonable bar to take a chance with bar 11. We end up getting the bull breakout 12, follow through 13, more follow through. Strong breakout, probably going to get a second leg. Buy for any reason, buy the close. The first bear bar, 17. Yes, it's a bear bar. It's a bear reversal bar, closing near its low. But this is the first bear bar in maybe 7 or 8 bars. It's a micro channel up. And the bears really having a hard time making any money so far today. So the first time the bears do anything, it's probably going to fail. So the first bear bar, bulls are going to buy it. Up here, this was really interesting to me. I had this target drawn. I think I talked about it yesterday. The low of bar 26 was a reasonable buy. Bull micro channel, overall fairly bullish. Bulls will buy here below 26, maybe not so much below 27, seeing that it's a doji, but they'll buy below the most recent strong bull bar, 26, and they got trapped on 28, and that becomes a test magnet. And look where the market started to go sideways. We actually got an IOI pattern, 26, 27, 28, right at that price. So this, to me, is a good place to look to take profits. We have a lot of consecutive climaxes here, here, pausing, here. We're at a magnet, and remember, it's an overall trading range on the higher time frames. So even though this rally looks impressive, we might just be testing the top of a trading range. IOI possible. Final flag, bears want a reversal. Reality is any reversal probably will be minor after this much buying. The bears try to get a sell-off, but really a weak trendline break here. Big bear bar, no follow through. Another bear bar, but now 2, maybe 3 legs down. In a strong bull trend, probably minor. And the odds are we're going to go above bar 27. Bears try a third time, but might just be a wedge. Bull flag, 36, big bull bar. More disappointment for the bears. Trendline break, yes, but still overall tight bull channel. Bears still having a hard time making money, and this bull breakout will likely get a second leg up. Was this the second leg? I don't know. Probably not. It's not really symmetrical. It's a brief second leg, but now 36, being an inside bar, isn't a breakout bar. 37 is a breakout bar, but it needs follow through, and then it had bad follow through. We might be at the top of a trading range or high in a bull channel, so bulls will start taking profits above highs, and they'll start buying pullbacks instead. 3-bar micro channel, probably going at least a little bit lower. 43 might be all that we're going lower. 1 pullback, 2. Also about a 50% pullback of the bull breakout here. Just about exact. So support there. Another bull breakout, but bad follow through at the high. But once again, another 50% pullback, and they bought it. So this, another interesting spot. The blue line is yesterday's high, and you'll notice we have 3 pushes up. The problem is that we have a bull trend. The selling pressure is weak. The bears have not had a strong trend line break. The bears haven't had consecutive strong bars. So seeing this as a wedge top, to me, is a little bit of a mistake. Because the reality is, the bears are not making much money. The bulls are still having an easier time making money, and this is occurring in a bull trend. Strong bull trend, getting weaker, but after 3 pushes, the bears are hoping for the reversal, but in reality, this might just be trend continuation. And if it is, the bulls, if we get the bull breakout, the target would be a measured move of this wedge. Bull breakout 50, follow through, more follow through, racing up to that measured move target. And it looks like we just about got there, 54. And maybe that is the second leg up. 1, pullback, 2, buy climax, pause, buy climax, pause, doji bar. Reasonable to get out of longs up here. Momentum starting to fade. We're at a measured move target. We've already moved much more than an average day's range on this day, and we're above the prior day's high, which was an inside bar, and I suspect there are sellers not far above. So maybe just get up below any bear bar. Bulls trying to get a quick second leg up here, and then outside down 58. Reasonable to exit. Longs below 58, but aggressive to sell. We end up getting a sell-off. And the reality is that's strong enough for a second leg, but the problem is, look at the context. Big up, big down. So yes, strong enough for a second leg down, but because it's a trading range, traders will look to sell a deep pullback and catch a delayed second leg. And the same sort of goes for this rally. Lots of trading range behavior in here, bull breakout, but when the momentum fades and we're far above the moving average, traders bail out of the trade. They look to buy a deep pullback, and that's what we got down to here. You can always look back at stop orders too. Look at bar 43, bad stop order, signal bar, but we got a breakout. We tested it, didn't quite get there on 47, and then we retested it again here and found support. And then we bounced 1, pullback, 2. Normally I would share the trades I took, but I did not take any trades today. I'm actually going to post a video about that. I record myself when I trade, and it's so I can document my thoughts and my actions and that sort of thing. And I really want to share what I was thinking today, because what I wanted to do, the biggest thing I'm struggling with, or let me back up. I'll talk more about this after I go through sort of the stop orders and that kind of thing. So stop order trades today. I think traders can take a chance buying above 10 or 11, 12, buy the close 13, 14, 15, 16. Always in long, buy above any bull bar. Maybe 18, but big tail, 19, fine. 22, buy the close, buy above 23. All of these are reasonable buys. Always in long, probably worst case scenario, the market goes sideways. 36, or let me back up, 32. High 2, reasonable to buy. Bull bar closing on its high. 36, another reasonable buy. High 3, bull bar closing on its high. High 1, 41, but 3-bar micro channel, probably going to get a second leg. But you could take a chance buying above 43, even though the signal bar isn't great. Micro double bottom after the bull breakout in this context. Or you wait for 44, buy above that bar. 48, also reasonable. I think here as well. 3 pushes, yes, but bears not doing enough, not getting enough selling pressure. To me, it does not look like we have a credible top, and the risk was real that we'd get the upside breakout. Maybe an aggressive sell below 58, betting will fall back into the middle of this range. Same with 60, low 1 after a bear breakout. But then through here, I don't know, maybe you buy 70 or 68, double bottom, higher low. Sort of a small major trend reversal pattern. Bear trend, trend line break, retest, higher low, major trend reversal, buy above 68. But in this case, more of a trading range overall with sellers up here. Bad signal bar 57. Odds are we'll retest it and find resistance there. So the upside is sort of limited. Limit orders today. Probably buyers below 3, buyers below 1, sellers above 5, bad high 1, big bar, tight trading range. Buyers below 6, it's a bad sell. Sellers above 7, bad buy, back and forth. But here, I thought it was not so great to sell above 10 or 11 because of everything I said in the beginning of the video with the context. And let's just think about it logically. I think I've talked before about price control versus time control. And if you think about the gap down as just one bear bar, you can do that. And if you do that, let's think it through. Gap down, so bear breakout, price control. The problem with price control alone is you get price control all the time in trading ranges, but that doesn't mean one side is necessarily in control. And just look through here. Bulls have price control, but then immediately we reverse down. Bears have price control, reverse up, and it goes back and forth. So these are buy and sell vacuums. So that's the way I saw the gap down, especially with the bars to the left. If we were breaking far below all the bars to the left, these bars didn't exist, and we're just below here, that's one thing. But we are at the bottom of a trading range. And like I said, major trend reversal on the higher time frames. So if you're a bear, you see this breakout. So far, this is bad follow through. The reality is you want the market to just go your way if you're a bear, especially after 1 or 2 attempts. So we tried on below 3, pulled back, tried again below 9, reversed again, even 6. So this is bad follow through. Let's also think this through. We have an area of agreement up here. Lots of trading range price action. The price spent a lot of time inside this green rectangle. So this is a magnet. Areas of agreement or trading ranges they become magnets, and breakouts will typically come back and test these areas. So bear breakout attempt, but look at the follow through. Tight trading range, possible final flag, really not great. And again, overall context, bottom of a trading range, possible major trend reversal. And that's why I thought if you're buying bar 11, you're not buying momentum. You're in a tight trading range here. But if you're buying bar 11, you're buying value. You're below the average price. You're below this average price. We're back and forth in here. And I thought this was also a reasonable test target up here. So again, you're not buying momentum here. If anything, you're buying value because the market is going sideways below the average price, and that is not above average bearishness. That's average price action. We're going sideways below the average or fair price. So that's why I think buying here was reasonable. And I'm talking that all out so I want to think this through. And what I wanted to share earlier, I was thinking about posting videos where, like I said, I record myself when I trade. And I had thoughts here. I wanted to buy above bar 11. I think I wanted to buy above 10. And then I really had this sense of urgency to buy above bar 11. I thought it was so strange. How can I have a sense of urgency to buy when we're sideways? But everything I just thought through and explained, it makes sense. So I struggle with, my biggest thing is trust issues. Trusting my own chart reading ability. And I say it all the time, chart reading and trading are 2 different skills. And I think I've proven to myself that my chart reading is sufficient to do well at trading. And now I need my trading to catch up. So again, my biggest issue personally is trust issues and basically self-doubt. if I can actually execute on my feelings, like for instance in this case, this sort of sense of urgency to get long here, I talked myself out of it. I took no trades today, but I wanted to buy here. And I already knew about this target, and it happened again. I want to say here or here. It might have been bar 49. I said, yeah, I see the three pushes up, but the bears have not had a meaningful trend line break. And whenever there's three pushes, but we're in a trend and the selling pressure isn't good, the risk is real that we get the bull breakout and the measure move up. And again, I didn't take the trade. So the reason I want to post those videos is so that you guys don't think I'm just blowing smoke and saying like, yeah, I called it, but there's no proof. And it's almost, I really struggle with this, and it's almost embarrassing. Like this internal struggle that I have where if I can just trust my gut, as crazy as that sounds, that's the part I struggle with the most. It's almost like I just have to trust my gut, because after you study charts for so long, you can start to incorporate your feelings. And it's not the typical emotional trader cliche where you're all upset if things don't go your way or elated if things work out. It's those emotions Al talks about with disappointment, confusion, urgency, those kinds of things. And I just thought it was really interesting that, I said it out loud. I wrote it in my notebook. I had this crazy, it seemed crazy, sense of urgency right here to go long. And now I think I'm at this part of my journey where to bridge the gap for me, I think it's a lot of trusting myself and just giving myself permission to do the things that I feel I need to do, because worst case scenario, I trade small, I learn a lesson, and if things work out, I gain confidence. So yeah, I'm thinking about just posting like a 2 or 3 minute video just where, and it's really just, I want to document this for myself. Like, I really want this to be a turning point for me. And it's frustrating when you feel like you have a good grasp on the chart and you understand what's happening. But, I think one of the troubles I think I've mentioned, I've studied Al for about 5 years, maybe 4 or 5 years at this point. And during that time period, there's a lot of time where I had no idea what I was doing. And I was trading based on literally, I had no idea what I was doing. I was taking trades for no reason. And through all of that, there's obviously been struggle. And what ended up happening is I got to a point where I just couldn't trust myself. Like, I didn't trust my ability to read a chart. I didn't understand what was happening. And because of that, naturally, I couldn't trust myself or my feelings to take trades. But I do think I'm at a point now where it might be worth, and I say that kind of jokingly, I really need to start trusting myself and see how that goes, because I can't tell you the amount of times that this kind of thing happens. I have a good grasp on things and I have ideas for trades, and it's literally no other way for me to explain it but gut feeling, these emotions that sort of guide me. And if I would just follow them, things would work out. So real quick, today was a bull trend day. And where do we go? Tomorrow. This is the extended hours chart, which is why we have a bull reversal bar here. Here's the day only. So you can see bull bar. Overall, I think I mentioned this, but 50% pullback of the rally, and we got this sell vacuum testing 50%, but of course we're finding buyers here. The bulls want a second leg up, and it's clear we're not going straight down. This is a problem for the bears. This probably needs a second leg up of its own, and it might lead us all the way to up here. But again, this bear breakout is still strong enough for its own second leg. We just don't know how deep that pullback will be, so we may have to go back up near the highs before we turn back down again. Bulls seem to be buying 50%, getting a decent bar on the daily chart. So as far as above today's high, I don't think there will be sellers directly above the high. And I could be wrong because it's a bull bar in a trading range, so traders might fade that. But we may have to go a little higher. Here's 50% of the sell-off, so maybe a little bit above today's high we find sellers. But again, I think we might have to get a second leg up before we find sellers. There are disappointed bulls who bought up here, obviously disappointed by that sell-off. And I think there are traders trapped up here. Bulls trapped into longs, bears trapped out of shorts, both looking to sell up here for lower prices. Again, I think give me just a few minutes after this video is posted and I'll post my live trading thoughts just to kind of back up what I'm saying and document it for myself. But other than that, thank you for watching, and I hope everyone has a good night.